Good afternoon. Welcome to this new video in which we're going to focus this week's analysis on two things mainly. The DXY as a major index for the performance of the US dollar, and then the correlation with the Euro USD to see where the week ahead could see potentially price go towards and create new forms of price action, which could then in turn potentially present new entry opportunities. So by beginning this quick analysis with the DXY, we can see that the dollar as a whole, it's finding itself at key important psychological zones. When I say this, I mean the fact that the coronavirus situation inevitably created a lot of tension in the markets, as we saw in the previous videos, and that inevitably pushed price lower and lower up until the 94.65 levels, where eventually price found its bottom to then initiate this huge spike towards the upside, which then reached way above the 100 levels. The key factors of this were the help from the government and the Fed's injection of liquidity. When these factors sort of aligned towards the help of the recovery of a huge economy, which obviously is the first one in the world by GDP measurements, then it's important to see how all of this will then have a knock-on effect onto all the other currencies. The euro dollar being the first one is the major one that responds to oscillations and volatility from the DXY index. So as we can see, in fact, we have reached now the March low, which is a very important level because of the fact that after that, if we break it, then we're finding ourselves in a situation from a dollar standpoint worse than it was in March, where the pandemic situation was at its peak. Everything was very negative. People had a lot of fear, and we had the global lockdown for a couple of months, as we all know. So I wanted to present this video as an opportunity to discuss where price could potentially go if we indeed close the week under the 94.65 level. We cannot say that for certain just yet, as today being Friday, the candle is still working for another few hours before the market closes for the weekend ahead. But it looks as though we are going to form new lows. My question would then become, how much longer can price go towards the downside before it finds new levels of support? My analysis would then lead me to suggest that we have another level here at the 94.2 roughly, but then also we're finding a great deal of support here at the 93.5 level. If we then manage to break both the first level and the second one and retest it nicely, which would then allow us to sort of assume or predict that there would be further downside to be expected, then the question becomes, are we really going to reach the levels that we reached on during February 2018? The question would be then, or the answer would lie within the fact that here we don't really see any more important levels of support, which would then also mean that if we, like I've said, manage to break these two, there could be a massive sell-off ahead for the dollar, which could see this currency pair lose around 6% of its value. 6% may not seem a lot in terms of equities and the stock market as a whole, but when it comes to currencies, it is a huge number. Any whole percentage points represents massive injections of liquidity, and volatility would then follow alongside. It's then important to then see if that level, like I've said, the March low, the 94.65, gets broken. Is this impulsive move going to last for another leg to the downside? And if so, we could see all of the other currencies being affected by this. The first one that comes to mind when looking at this chart analysis is the euro dollar, as I've said previously, as that's the one that plays the best correlation or the biggest correlation between the US dollar as a whole and the euro. As we know, a few days ago, the European Commission announced that the major all the countries really within the European Union would see some help from the European Union. Italy will actually receive about 200 billion of this recovery fund. we'll now have to see how the politicians and the government as a whole is going to manage and administer and utilize these funds, and hopefully they will be used in an efficient, clever, and good manner eventually for the best outcome for all of us. Now, other than this, it's important to see how the situation that I just talked about, so the injection of new funds into the markets, shot the price right towards the 1.16 level, which is a very key psychological area because it's a daily level. So this zone will be very important, and if broken, pretty much like the DXY on the reverse side, could then see further movement to the upside. But before we do that, given the fact that the momentum is quite strong, or has been quite strong up until now, we'll probably have to see some rest before continuing to the upside. So on the 1 hour chart, we can see that the fib is showing from point A to point B a perfect touch on the 61.8 level, which then coincided perfectly with the first level of the minus 27.2. So all of these are retracements and these are extensions. So the second extension, the minus 61.8, also coincides very nicely with the 1.166 level, which is, however, a 4-hourly level, at least in my opinion, meaning it has less of an importance than the red one. This is to say that in order for us to break this level here, we need less liquidity, less momentum than we need to break this one over here. So now that the candle is about to close for the hourly and for the weekly time frame, just a few hours left, we will see how price is going to finish the week. My bias would be quite bullish on the Euro USD and quite bearish on the dollar as a whole. We're going to see, like I've said, a nice continuation of lower highs and lower lows. So we've got this structure, this bearish structure, which so far since the 21st really of July 2020 has been respected. So if we wanted to plot some lines here just as a guide, we could see how this descending channel could potentially continue further to the downside. First area of reaction, the 94.2, then the 93.5, and if that gets broken as well, we could see price plummet also down towards the let's see here, the 88 or 89 roughly levels. So all of this area consolidation that we saw in 2018 could then be the ultimate place where it would really be difficult to break that level there. If this zone gets broken, we could also see potential further movement to the downside, but that gets if we were to get to that level, the situation of the economy as a whole would be quite terrible, in the sense that we would lose from the highest point of March around a 13% of value of the currency, which is extremely high. So for now, what I'm focusing on is the 4-hourly close for the price action movement, as I really like this engulfing pattern that is going to engulf, like I've said, 1, 2, 3, 4, 5, 6, around 6 candlesticks of price action prior to this one here, which then is going to print new lows, form new lower highs, and continue lower. However, all of these are just theories. It's just my opinion. I'm not trying to convince any of you that this is the right way forward, because I have been wrong in the past many times, and most likely I will continue to be in the future. As trading is a game of probabilities, you will never know whether the next trade will be successful or not. It's just the awareness that over a large number of trades and over a large sample size, you will be profitable if you know your strategy, stick to your plan, and so forth. So just to wrap up this video very quickly, retest of this level from Monday onwards, continuation, hopefully break the 94, because when I say hopefully, I mean if that happens, the Euro USD will also see a further move to the upside, and I'm looking to take a nice trade either from here to the upside or from there to the upside as well. But I'd like to see a clear break with a clear structure, so high highs, high lows, similarly on this channel here, which would then also line up perfectly with the third touch for the continuation higher. I'm going to monitor the Euro USD very closely. I'm going to set a couple of alerts, maybe around the 1.16 level and the 1.165 level as we're about to approach it, because whenever price touches this zone, I get a notification. Then I will be able to monitor the market. As you can see right now, as we're speaking, the euro is still trying to push higher. The dollar inevitably is pushing lower and lower because of that inverted correlation between the two markets. So this quick video was to just provide you guys with my analysis on what I'm expecting to see from Monday onwards, and we'll catch you on the next one, and thanks for watching.